When Sandy happened, did they pull out of New Jersey? So why are they pulling out now?
You're expecting, okay, like my insurance company, they're gonna pay to fix my house, and then it's like, oh wait, but they're nowhere to be found.
America's insurance problem is becoming a nightmare, but it's okay because we're here with an insurance expert who's going to walk us all through this.
If you have noticed your homeowner's insurance rates going up, you are not alone. Rates are not just high. There's a much bigger problem. Insurance companies are simply not renewing thousands of people. Amy Davis is here to explain what's going on and what you should know about your coverage right now, Amy.
Yeah, and this is something we've been following for months, and we're hearing from a lot of you about it. The homeowners insurance market is just crazy right now. Several big insurance companies, we've told you, have completely pulled out of California and Florida, and some carriers have stopped writing policies in areas around Houston. The rates that we're seeing are double, sometimes triple of what you paid last year, and some homeowners are finding it hard to get this coverage at all. Leash Yu from Agency U, Higginbotham West University says right now, 300 of his clients have been told that their insurance companies will not renew their policies. But if you have a mortgage, homeowners insurance is required. So we asked him, what are those homeowners supposed to do?
So if you call your lender and say, I can't find homeowners insurance, they will happily force place coverage on your house because they make money on that force placed insurance policy, but they only will cover their collateral. Like they'll only cover their home. So if something happens to the home during this force placed season of life, only the home would be covered. The belongings that you have that you own won't be covered. Your liability won't be covered. And it's really expensive. It's usually twice the price of normal homeowners insurance. And so it's a bad situation if that's what happens and you can't find insurance.
Okay, so one reason this is happening, take a look. After 2020, the average amount that the insurance industry has paid out each year in claims, it's been $76 billion on average in 2020, 2021, 2022. Before 2020, the average payout used to be $30 billion a year. So they just say these catastrophic storms that are causing all this damage are the reason. So Yu says one major storm this year anywhere in the U.S. could cause the insurance market to collapse.
Why are companies fleeing Florida and California?
300 homes got abandoned by their insurance company in the same
That's
town.
crazy.
What's up with that?
Yeah. So, I mean, the thing is that, after COVID, obviously we've had a few catastrophic storms that have happened, and that caused the claims numbers to go up in general. But also you combine that with the cost of inflation, and then you combine that also with insurance companies regulation, with insurance companies not being able to properly rate policies for a few years. That causes for them to have to kind of play the catch-up game, right? If the insurance companies can't properly rate policies, then what ends up happening is they start especially the smaller companies can potentially go out of business. And some companies just decide, hey, you know what? If is this gonna put us at risk to go out of business, then we might as well not even sell insurance in that state.
But when Katrina happened, did they pull out of Louisiana? When Sandy happened, did they pull out of New Jersey? So why are they pulling out now? I mean, you said there have been a couple of catastrophic storms, but in my lifetime, at least, there have been some catastrophic storms. I remember Sandy. I had no anything for a long time.
During those time periods, I think that there was insurance companies were able to properly rate. We didn't have the combination of also inflation happening at the same exact time.
Bullshit. It sounds like a bunch of bullshit.
Inflation.
I know.
Just excuses.
Yeah. And the thing is that they tried to, and at the time, some small companies during Sandy, I remember, like, there was companies that went under, that they just completely.
So who went under and what happened to their clients?
Well, I don't know their names off the top of my head, right? But what happens is, I mean, just imagine, you've been paying for this policy for X amount of time, thinking, I'm getting a cheap policy. It's a smaller company, but then you run the risk that when the claim happens, and if they get wiped out before they pay you, then no one is paying.
So
you.
you're SOL.
Yeah.
There's no
Really?
there's no FDIC for insurance companies.
FEMA doesn't work with that.
No, so FEMA, they focus primarily on flood.
They're just flood.
Yeah,
Okay.
and I mean, they do some catastrophe, but it's primarily flood.
So
but
we're
it's going
talking-
up like 30 more billion. What is it?
So
Yeah.
yeah, so
That's a big gap.
yeah. So
Yeah.
that's the thing. The claims for before COVID was 30 billion
Right.
a year. That's what insurance companies were paying out. After COVID, 76 billion. I mean, it's the cost of insurance companies are in the business of replacing your stuff, right? And if your stuff is more expensive to replace, then they have to pay out. So regardless of what, if they gave up a certain price and things now went up dramatically, they have to pay that no matter what. It's not like they can say, oh, well, you know what? We were taking into consideration the price from before, not the price of now after inflation, but they still have to pay that out. But now they've paid out 76 billion. So
Do you think that other companies will derive from this? Like, does your the stuff in your home have to be covered under home insurance, or can it be like something else? Like, can we get homeowners for like the
So you're
home
saying
and
like
then
a belongings policy that
Yeah.
doesn't have to do with insurance. So that would
Yeah.
be, I guess, like a renter's policy, wouldn't it?
Yeah.
So if you didn't own your place, then you can just get a renter's policy
I
to,
had that.
to
It was bullshit.
replace your personal belongings. Yeah. No, it's
Did
actually.
you have a bad experience
Did you
with
have
a
a bad
renter's
yes, I
policy?
did. They didn't
Yeah.
give me the price back for really anything.
Oh, okay. So then you probably did not get a good company. I'm
was
not
it?
gonna.
Who was
I'm
it?
not.
Tell
I'm,
us.
I'm not
I don't
gonna
remember.
name drop.
Did you get
Can
replacement
you do
cost
it through your
coverage?
bank? Is it possible?
I mean, they could be recommending. They could have a partnership,
Oh.
like Bank of America could have a partnership with the State Farm. Sure, why not? I don't see why not.
Yeah, no, they won't do a partnership, but they could be it could be required by your landlord,
Yeah.
to get a
Should be.
renters, which I think every person that rents should have a renters.
Yeah, and that's a whole nother area. Renters
Yeah.
policies
Yeah.
are very important because it does help. If I had a building once that burned down with 14 tenants, some had renters policies and they were great. They had no issues. The others didn't even have money, couldn't even afford a hotel.
Right.
And then even though I wasn't obligated
You
by
did.
law, we housed these people for a couple days to just try to help them out. But
Yeah.
if I were to when I do bigger projects like that, I do enforce renters insurance coverage. It's not expensive. It's like how much?
Okay, it could literally run anywhere depending on the coverage, but it could be as low as $15 a month.
Yeah.
Oh, wow.
And then you require that as a landlord. So
Why are companies, though, pulling out of the whole state
Yeah,
of
why?
Florida
Right.
or pulling out of the whole state of California?
Yeah. So that question is like it's a super complicated one because it has to do with a lot of being able to price properly. It has to do with regulation. It has to do with the number of claims that are happening, and also in Florida and California's issues, they're different. They're pulling out for different reasons, but nonetheless, I think the bottom line is that insurance companies obviously they have to stay in business. So if their if their only solution is to pull out of a state, then it's a pretty bad situation. And that's why it's important to really be with a financially strong company, because if you get stuck with a company that went out of business in the middle of let's say a big storm that you're expecting, okay, like my insurance company, they're gonna pay to fix my house, and then it's like, oh wait, but they're nowhere to be found. They're gone. They got wiped out because of this.
has that ever happened that you know of?
That I know of, I've heard of stories, but it hasn't, like, at least in my career and I've been in Connecticut and while I've been in New Jersey, it has not happened in those states.
Okay,
So
how do we know if a company's good? Like, what's the rating? What should we be looking out for?
Yeah.
What's the average person need to know on how to make a decision?
So for example, I can talk to my company, to State Farm Insurance. I mean, the fact of the matter is that State Farm's been around for 100 years.
Right. We know the jingle.
Yeah.
We
So
proved
so
it.
everybody's seen State Farm, been around for 100 years, and to me, that longevity of being around for that long is extremely important because State Farm has been around the block, right? So we've seen, they've seen many storms, and they know exactly how to prepare.
In the video, he said that you can get a coverage through the bank, but it's more expensive. What are these people supposed to do? And like, what if this happens?
Well, that's a forced coverage. They're like, you're going to get it no matter what.
That's a forced coverage. You don't, no matter what. So like, for example, let's say that this happened, and this could be anywhere. Let's say that let's say you just said, hey, you know what? I don't want to pay my homeowner's insurance anymore. It's too expensive. You cancel it. You have a mortgage on your property. The bank is going to ask you, hey, can you send me that proof of that policy? Okay. You're not going to have the document. So the bank is going to give you like, hey, you need to have a policy in place. So we're going to put this policy in place for you until you get your own policy,
and
we're going to charging it.
Right.
We're going to put it on your mortgage.
And we're going to make a premium off.
So your monthly mortgage payment will increase by the amount of the cost of that policy.
Yeah, that sucks.
And then if you don't pay, I think they can use that to foreclose against you, right?
Yes, and then they can use that because basically it's like you not paying your.
So every single resident that lives in California and Florida, I'm sorry, I'm stuck on this because it's absolutely ridiculous to me, is stuck having to go to their bank for.
Not every single person, right?
So what? For example, State Farm is not renewing the policies, right? So they're doing something a little bit different. They're going to be basically cutting the certain coverages out of the policy, and then the customer can get that particular part of coverage with the state, and then and then keep the other part with.
So that's
with
a benefit
State Farm.
of being with a bigger company.
With a bigger company, because they can because they're trying to work it out and trying to make it work for the customers. Yeah.
So if I am a home buyer, a homeowner, I know that you have a couple of tips to make this whole insurance thing not as horrible. What are they?
What are the tips?
So, all right. So if you're a homeowner, right, and you need to
or home buyer,
because
you're gonna need insurance,
yeah,
right?
You're a home buyer. So the first thing is, sometimes you just kind of go with the first insurance company that somebody recommended to you, and you don't really look at the coverage because where you're going through the home buying process, the homeowner's insurance is like the last thing on your list, right? It's more like the bank is like, this is a requirement, you meet the requirement. But what you want to do is you want to just take that moment and really make sure that you have the proper coverage, because essentially when you choose your coverages, and then let's say you could buy your house, close on your house, and the very next day have a claim.
Right.
You can have a claim a month later. And if you made the wrong decision with the coverages because you were just trying to check off a box, then you could be stuck with.
So I need to date my insurance companies.
Yeah.
Yep. Yeah. Sleep around with them. I get it.
especially right at the very beginning,
Okay.
But if you didn't do that when you first bought your property, then right now is the best time to start doing that, because there's also ways, you can reallocate coverages. Like there's certain coverages that you don't want to skip out on, because first thing that when people call their insurance company, the first thing that they say is, I want the cheapest.
Right.
I want the cheapest. Give me the cheapest.
Like car
that you
insurance.
have.
It's like
yeah. You say you tell me you want the cheapest. What a lot of companies do is they strip down your policy to bare bones.
So they're not covering anything.
They're not covering anything. They're giving you the lowest limits of liability.
And then the next day something happens and you had taken it out.
Then
so we need to teach people that you have to decide the coverages you want and say, this is what I am concerned about. This is what I need, and then ask for a price, as opposed to
exactly.
So this is one area that you can't really go cheap. You can't. You have to just get what it is. What it is.
I think it's as you learn about insurance and as you learn about real estate, it's understanding what the coverages are for. So let's talk about some of them. I know there's mold coverages, there's flood coverages, there's there's terrorism coverages, there's liability.
I'll give you one example, right? There's a coverage that you can add. There's endorsements that you can add to your policies, and some of these endorsements are literally like $30 for the year, $50 for the year.
It's nothing.
Okay.
Right? And
What's
And
an example of an
So
endorsement?
an endorsement is like there's like a
An
backup
add-on.
of sewer drainage endorsement.
Oh, that's a
my
good
God.
one.
Yeah, that's like
Let's
that's
do
like
it.
that's the easiest one, right? So
$30?
So
I'll give it to you now.
$30-$40. Let's say, for example, like
For
depending
$25,000 of
Everyone
coverage.
in
Right.
New York needs that.
for yeah. So you get, let's say, for example, let's just say, for example, it's $10,000 in backup of sewage drainage coverage to clean up if your sewage backed up into your house. If you don't have that coverage, guess what? You're stuck paying that $10,000 out of pocket.
You're
Right.
stuck cleaning that shit.
Let's
on
do
your own.
$30 instead of the 10 grand.
Exactly. But how long
That
will
literally
it take
happened
you?
to me in my last apartment.
For you as a New Yorker,
It
it's
happened to
Wouldn't
me
you have rather paid
twice,
the
and my
$30?
whole apartment smelled like shit.
And on renters, you can have something similar.
I wish I would have knew
it's
that.
the same thing as being in New York, and either you're going to park in the garage or you're going to park in the street and get a $150 ticket, or you could have just spent $40 in a garage.
my God.
Spend the $40 for the garage.
What is a flood? Because people think
It's
water.
when water
if
comes
your
into your
basement fills with
home.
water,
It's not flooding.
it's not always a flood. So why don't you
So-
touch
I don't
on
know. Let's ask
the
Merriam
difference between
Webster.
like what a flood is and what rain is, and all of a sudden if you think you had a flood but you really didn't, then they're
Yeah.
gonna.
So for example, let's say a pipe bursts in your basement, and now you have water all over your basement.
That's not
Let's say like your water heater broke. Now you have all this water in your basement. That's not flood. That's your water heater breaking. So they won't pay to repair your water heater because that's a cost to you, but the cleanup may be covered, right? So and I always say, maybe, because it always depends on the circumstances of the situation, right?
I don't like those maybe fine prints.
Yeah. There's always a maybe.
Yeah, there's always, you always have to understand that it's always a maybe until they come out and because let's say, for
But does
example,
it matter which agent you go with about the maybes? Like, can your
No,
agent?
no.
Oh, okay.
It won't
He's
matter.
gonna say no. I'm gonna say yes. If you go, you have to have the right insurance agent, whether it's someone wearing a red shirt or another insurance broker. You have to have people that know what they're doing and know how to advise you
Okay.
on what,
Enjoy
your,
your color.
what your
Yeah.
answers are. So
So so basically, what happens is there's things that won't be covered, and then there's things that will be covered, right? So the point is that so with the flood, if it's, let's say, water rising up from the ground or seeping in through the windows, that's going to be considered flood because you're going to see sometimes the flood is not just water coming like let's say you have a pond in your backyard and the water starts coming in. That's obviously flood,
Okay.
but that's not the only way that flood happens. Flood can also happen like you can have what they call is like I guess it's an underground river.
the
which-
groundwater when it comes
Yeah,
up.
when it
I
comes
know.
up.
Dealing with
Yeah.
pool
Yeah.
stuff,
Yeah.
pool
No.
liner stuff. Yeah.
Yeah, so that underground water can come up in your basement,
Right.
and that could be considered flood. Now, let's say
which
that
means it's not covered.
which is not covered.
Oh.
Yeah.
Wait, what?
That's not
Yep.
covered under homeowners.
Or what
Okay.
about rain? What if it's a heavy rain?
So let's say, for example, your roof gets blown off, and now you have all this rainwater coming into your house.
That's
That is
covered.
covered.
Okay.
But
That's
what if it's
covered.
heavy rain, and the heavy rain pools in your backyard,
And
then
then
that
seeps
pooling
in.
seeps into your house? What is that?
That's part of flooding because
Which
it's
means
not,
you're not covered.
which you're not
So
covered.
most
Wait,
people don't
what?
get you're not covered. It's no flood. You may not even live near. You may live in.
The desert.
Yeah, and
And
you have a
just
huge
have
rainstorm, and the
freak
water
rainstorm.
pools up, and then it just drifts into your house. That's a flood. You're screwed.
But it's a flood, and it's not under
It's
the
not a
flood.
flood.
And
I don't think it's a flood. I think it's rain. But the red
So-
shirts say it's not.
The red shirts. So
They say it's a flood, and therefore you're not covered. So how do you work around that?
You can't. That's
Okay.
that's the the only way to work around that is get flood insurance.
So every
you know.
house out there, if there's a torrential rainstorm and there's a
You would
ponding in their backyard and that water ponds and flows
they have
into
to
the
be like
house,
me. They have to
if
suck
they
it up
don't
and get
have
some
they're
flood
screwed.
insurance.
Yeah, so there's people, right, that they're like, you know what, I don't want to take the risk, and they buy the flood insurance.
Ding 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 ding
You
ding
know,
right here.
it won't
You don't
cost
even
the
have a
same.
basement in your house.
We don't have a basement, but we live on that pond,
Yes,
and the
yes,
pond is
yes.
going to come on up, and
Yeah.
it's going to be a tsunami and the swan and the whole nine.
So it's basically you can get flood insurance even if you're not in a flood zone.
Mm-hmm.
It'll just be a different price. Like when you're actually in a flood zone, it'll be
More expensive.
way more
So
expensive.
like for normal houses, it'll be like a $30 endorsement.
No, it'll still be like $1,000 or
Okay.
something like that.
Okay.
And but it won't be the regular price. So like it's pricing again, it really depends as to the area, and there's like a bunch of factors that go into the pricing. But just to kind of, give you an idea, it's the difference.
It's scary.
We are going to have you on
Yeah.
again because I have a ton of insurance questions, and I think people don't always understand insurance. They think they do, but they don't. But your two things were shop around. We're going to date your insurance agents, and don't get bogged down on the money issue, because if you need it, you need it, right?
Yeah. It's at the end of the day, you're either going to self-insure yourself
Ooh.
or you pay the insurance company to insure you.
Thanks for watching this episode. Now don't forget to like, subscribe, and leave a comment, and we'll see you next time.